All right. Good afternoon, everyone. How are you guys doing today? Hey, Zoran. Hey, Freda, Stuart. How are you guys doing? As you are joining, and we'll give it a couple of minutes as everyone streams in, do let me know if you can see me, see my screen, and hear me okay. Put it into the chat and say hi. Good afternoon. Hey, Alan, how are you doing? Hope you're well. Hey, Andrew. Hey, Andy. Nice to see you again, Zoran. All right, so I'm sure you can hear me okay now, and I'm pretty sure you can see my screen as well. Hey, Andy. Hey, Andy knows what I'm going to ask for next already. He's just put it into the Q&A. So as you guys are joining, let me know where are you joining me from. So we've got Andy from Germany, right? So let me know, where are you joining us from? And also today we are getting through the advanced Ichimoku strategies. You know, while you're letting me know where you're coming from, let me know whether you use Ichimoku strategies as well. Bonjour from France. From Hong Kong as well. Hey, fantastic. Thank you all for taking your time out to join us on this fantastic day. I had a few good trades today, so I'm super happy. And then we do have big news to be released into this week. So I'm looking forward to that. I'll give you a little bit of a analysis of that as well. All right. So we'll do mostly Ichimoku trading strategies, and then also I will do touch on the news that's coming up. Good to see everyone here. We'll get started in a minute. So does anyone use the Ichimoku strategies or the Ichimoku indicator? Hey, Jamilu, good to see you back again. Not yet. Would you like to? Or is this something that you just want to learn? Or would this be something that you would look to actually start applying onto your strategies? Fantastic. Good to hear, Andy. Nice. Fantastic. All right. So let's get started. Quite a number of things to get through. Today we are getting through the advanced Ichimoku strategies here with Vantage. My name is Jin Bao. Everyone calls me Jin. So again, as I go through the slides, if you do have any questions at any point in time, please feel free to put it into the chat or into the Q&A. And if you are joining us on any other platforms, we've got Harry James there on, I think on Facebook there, one of the chats. Do let me know, put it into the chat. Let me know if any questions. I'll be happy to, address your questions as we get through the material. All right. I can't figure out how I would be able to send out the slides to you guys, but this is recorded. This is being recorded, so I'm sure it'll be uploaded onto the YouTube channels and across all the different platforms. So you can always check it out, watch the replays again, just in case you missed out on any bits. The recordings will be there. All right. So as usual, before any start of any webinars, quick disclaimer. The information, context, opinions which are expressed in the presentation and in the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. All right. Basically, what I'll be sharing with you is um, some information about trading with the Ichimoku strategy, and also my thoughts, my views of how I would use the Ichimoku strategy indicator. All right. What I also will be doing, if time permits, is that I'll be looking at live charts. I'll be giving you some examples on live charts. So if you do jump into any trades, please make sure you do your own due diligence, do your own analysis, right? Not just because of what we said during this session, right? Learn from this session, do your own due diligence, do your own analysis, and then if you feel comfortable with the result of that, then get into the trade. All right. So with that said, introducing a team of analysts here supporting you through your trading journey. There's actually a couple more which we haven't got the pictures for, but we've got Desmond as the chief trader, we've got Cassandra and myself as the prop traders. Just to give you a bit of a background, I see a lot of new names here today. So just to give you a bit of a background, I have been trading for more than 10 years now. I have managed a multi-million dollar fund, 20 over $1 million fund previously. And, I've been trading for a very long time. I do it on a day-to-day basis right now. So a lot of screen time I've had, I've traded through the GFC, I've traded through recently the crypto boom, and recently the pandemic as well, gone through many different market cycles. So if you have any questions regarding trading especially, please feel free to let me know. I'll be happy to give you my thoughts, my opinions on, your questions, and also on if any other ways I can help you through your trading journey. With that, as I was promising to you, a couple of things to get through today. Firstly, what is the Ichimoku Kinko Hyo indicator? All right, how do you use it as a strategy? Okay, breaking down the different lines that are making up of this indicator. All right, how to use the IKH, which is the Ichimoku Kinko Hyo strategy. Let's shorten it to call it the Ichimoku indicator. All right, how to use it effectively, and then combining it together with other strategies, or combining it together with other analysis, so that you get a bit more of a wholesome view, you get more of a complete view to help with your analysis. Okay. Harry, James, yes, I'm pretty sure you can watch this. It is recorded. You can also check back onto the videos later, so you can watch this later again. As what I always would profess or tell you guys is that you should never use one strategy alone, right? Never use one indicator alone. I've gone through other indicators such as the MACD, the trend lines, the moving averages. You never want to just use one alone. What we're doing is we're sharing with you many different kinds of indicators, different kinds of calculations to help with the analysis, so that you can actually combine it, right? And try not to combine two momentum indicators or three all together, because if you combine all the same type of indicators, right, it's going to tell you the same thing. So you want to combine a few different ones, right? Oscillators, momentum, all that put together, so that it gives you a more complete view of, and gives you different perspectives. And if it all lines up, then you know that, it's not 100% trade, but you know that it's going to be quite a good likelihood in terms of where the trade could be heading. All right, all good so far? So let's get to it. What is the Ichimoku indicator, right? The Ichimoku Kinko Hyo indicator. Basically, Ichimoku translates as a glance or a one look, right? Kinko Hyo translates as a table of equilibrium or a balance table. What it means is that just by applying this one indicator on, it should give you in one look, right? It should give you in one look a bit of a balanced view, right? An overall view of where the market has been, is, and could be heading towards, right? It gives you has been, is, and could be heading towards. Main things that we use it for, right? Firstly, identifies a bit of the, let me do this as well, right? Firstly, identifies a bit of the support and resistance levels, right? A bit more of a dynamic support and resistance levels. I'm pretty sure some of you have gone through sessions that I've done about support and resistance levels, which actually tells you, I tell you horizontal levels, or using moving average as a support or resistance level. This Ichimoku actually gives you a little bit what I would consider as a dynamic view of the support and resistance level, right? And it also gives you direction of the trend, right? So it gives you a little bit of a trend direction, and also gives you that momentum, right? It shows you the momentum of whether price looks like it's going to continue pushing towards the upside. Is the momentum slowing down? Is it going to hit some level and turn back down? Gives you that momentum as well. So it's quite a powerful, or in fact, a very powerful indicator that if you use it properly, can give you quite a lot of information on the charts. But bear in mind, it's not going to be that silver bullet that you want to just apply and then, jump into every trade that it signals, because you still want to do a little bit of analysis despite what it can tell you there. Okay, it can get quite confusing. Because there are quite a number of components that comes together to form this Ichimoku indicator, right? Quite a number of components that comes together to form this. But what I'll be doing for you is I'll be telling you about the components first, and then we'll be looking to simplify it down to the key factors that you want to first focus on, right? Focus on first, and then as you get more comfortable and more more confident and more confident with this indicator, you can start adding on and start analyzing the other parts or the other components of the indicator. All right. Again, if you have any questions, please feel free to let me know into the chat. So there are many lines, and actually let me just jump forward there. Okay, there are many lines that forms up the Ichimoku indicator. Right, you can see in the middle there with the green and red candle bars, in between or around all that we have the cloud, we have the lagging line, we have the leading line, the current price lines, a lot of lines forming that indicator. Okay, so don't get too confused about it, or try not to get too confused about it. There are parts that we focus on, and there are also parts that we could actually overlook for the time being, right? So coming back to this, the Ichimoku cloud, right? So I want to pay attention to it. The cloud is composed of 5 lines, right? I was actually thinking and debating to myself whether to give you the calculations of the lines, right? The different ways to calculate the lines, but in the scheme of things, you never come to a situation where you need to calculate the lines, right? You never come to the point where you need to calculate. So I've left out the calculations, but you just need to know that it's 5 lines, 2 of which comprises the cloud, where the difference between the 2 lines is shaded in, right? So if I scroll through again, you can see the lines, and then that's the cloud. So you got the green cloud, and then you have the red cloud as well. Oops. Okay. And these lines include 9-period average, a 26-period average, an average of those 2 averages, 52-period average, and a lagging close price line. All right. So 5 lines there, 9-period, 26, average of those 2, 52-period, and a lagging close price line. Don't need, again, can't stress out enough. Don't try and calculate or over calculate those lines. Focus on how those lines forms the cloud, right? How those lines forms the cloud, because the cloud is the key part of the indicator. right? How we use it is the cloud is a key part of that indicator. What I mean by that, when price is below the cloud, generally we look at trend heading towards the downside. When price is above the cloud, generally price is heading towards upside. The trend is up, right? But the main thing is the trend signals are strengthened if the cloud is moving in the same direction as price. Okay, that means is that, for example, we have the candle there. And those of you who are my frequent viewers will know that I'm terrible at drawing on the mouse here. Right, with the candles moving towards the upside and price is above the cloud, and you actually see the cloud forming. Right, you see the cloud forming that way towards the upside. That actually shows that the cloud is moving the same direction as the price, shows that it's a stronger, or indicates the likelihood of a stronger uptrend, right, towards the upside. An uptrend, top of the cloud is moving up, and followed during a downtrend, bottom of the cloud is moving towards the downside. Makes a lot more sense when you look at it onto the charts. You can see here as price pushes up, all right, just this section here. As price pushes up, you can see that firstly, it's above the cloud, right? It's above the cloud. And also we see that the cloud is pushing towards the upside. It's moving in that same direction, giving us that strong upward move, right? And then also when it starts coming back in, you can see that price has actually, or rather the cloud is flattening out and then crossing down. This is a bit of a leading side. This is the current side, and that was a past. So it shows that it's pushing slightly towards the downside. Okay, so those are the main components. The cloud, look at the lines there of the Ichimoku. All right. How do we come to the lines, or how do we form those lines and the clouds? This is on TradingView. You can look into you apply the Ichimoku indicator on. You can see that that's the baseline. The red one is the baseline. The blue one is the conversion line, right? Basically, those are the different moving averages there. You get the lagging span, right? I'm sure there was the Japanese translation to these names, but I haven't got the Japanese translation there, right? But that's the lagging span forming behind as price moves. And you can see that it just gives you that a little bit of a view of where as price moves, it moves in a similar direction, but it's just shifted a little bit to the side. It gives you that view of price movement. Bear in mind, as the name says, it is lagging, right? And then we have that leading span, right? So now we're looking at this as, hey, it's going to possibly start moving up, and then after that, consolidating or turning a little bit to the downside, right? As it push up, consolidating, and then possibly pushing towards the downside. Putting that together, where is it? The leading span A and leading span B, when you combine it together, what does that form? Put in the chat. I've already showed you the developed picture of that, but when you combine, thank you, Zoran. First one in, best dressed, right? Thank you, Andy. Right, so when you combine the leading span A, the green one, and then the leading span B, which is the red line there, it forms the cloud. Right, if you were to shade it in, it's exactly what we're just showing you, that cloud. Right, and you can see that as that green line is above, the red one, we're going to form that upward cloud or that green cloud. And then if that red line is above the green line or leading span A, then we're going to see that downward or that red cloud. Okay, at this point, you can see that, right? Once you get it shaded in, you can see that's your green cloud and red cloud. Okay, before I get into that, what do you notice? What do you notice when price comes into the cloud? what does that act a little bit as? Right, as price comes into the cloud, what does it act a little bit as? Fantastic, thanks for that, Kokwai. You know, I would use the cloud as that dynamic support and resistance level, right? A little bit of a dynamic support and resistance level. Why I say dynamic is because typically what we would do is we would draw, that horizontal line right across, and it's pretty much fixed there. These ones actually will form, if I scroll up a little bit, it will form as the price is moving, because this is a calculation. You remember the 5 lines, 5 moving averages lines that we're counting or were calculated before. It forms as price moves, right? So it's dynamic. I would use the term as dynamic support and resistance levels. Okay, so very important there. For me, I like to see prices or candles form into that cloud, right? Form into that cloud, because it tells me that price is heading into a cloud or heading into an area or support level. What happens there, right? We're going to see possibly a little bit of consolidation and then that breakout or that bounce off. In this case, it comes in a little bit, doesn't really go in fully, but we saw that big bounce off that support. Again, we saw that big bounce off of that support here, breaking down. You can see that turn back down as well. So we're looking at many components put together, right? Not just a support level or resistance level, but how that cloud is pushing price, price below the cloud, pushing it towards the downside. Once it comes back in, once it breaks out of that cloud, it forms that support level that we see that upward push. Okay, so again, in this example, you can see that price breaks lower, right? Outside or breaks into that cloud, looks like it's going to break towards the downside. We have this forming as well. What we're looking for is price to break out. We're going to see that downside. All right, so again, with this blue line here, that's a conversion line length, the 9 period, right? Baseline length, the leading span B length of 52. But pay attention, not a lot of people focus on that term there, displacement, right? Not a lot of people focus on that term there, the displacement. Any idea what displacement is at this point? Anyone wants to tell me what displacement is? All right. Okay, see? Not many people pay attention to what displacement is. Displacement basically, fantastic, Zoran. Did you just quickly Google that? All right, good effort. So displacement at 26 there. I know, I'm just kidding there, Zoran. If we change it to a 36, right, it's just that shift. You can see now it's there. The cloud, the price is inside that. We change it to a 36, it just shifts right along. Right, it shifts right along just to give you, what does it do? What does that, why would you want to shift it a little bit? So I'm just going to scroll through and just show you the difference there. Right, you just shifted it 36, basically from a 26 candles to a 36 candles. You just moved it along by 10 extra candles, just so that you can see a little bit of giving it a little bit of breathing space of how price is going to react to that point. Okay, just giving that little bit of breathing space to see it push along that side, and then you're going to see what happens as it reacts to that point or inside that cloud. Okay, so main thing of how to use this more effectively. Overall trend is up when the price is above the cloud. We know that already. Down when the price is below the cloud, and trendless when it's in the cloud, right? Trendless or transiting when it's in the cloud. Again, inside there, it's bouncing around. It's finding a directional bias. I like to use the term it's finding a directional bias. So traders will often use the cloud as an area of support, which we've just gone through, or resistance level, depending on the location of price. The cloud provides the levels which can be projected into the future. That's the other reason why we shifted a little bit, just to give us that view, right? We shifted a little bit because it gives us that projection into the future in terms of a support and resistance level. Okay, and that's why this is one of a very important or very powerful technical indicators that provides the levels based on price movements as it happens. The only downside, well, not the only downside, but one of the downsides that I kind of think about or encounter in terms of the Ichimoku is that it tends to make your charts a little bit messy. Right? It tends to make it a little bit messy, but once you get a hang of it, once you get used to looking at, the cloud, how price is reacting to the clouds, then you kind of filter out the noise. You filter out and you focus on what you actually need to know. Right? So how to use it effectively? You can use firstly how price reacts to the cloud to give you that idea of momentum. Remember we talked about, it tells you support and resistance levels. It tells you that trend direction. It also tells you that momentum. As price stays below, so once you can see here, it came up, or before that it came up, it hit that cloud area, and once it rejected, so this forms that resistance level, right? It forms that bit of a resistance level. You can see price rejecting that area, and then again forming that support level now towards upside. You can see price rejecting that area. Once it comes close, right? Once it comes close or into the cloud, then you're going to have to be extra careful. You're going to be at that point where you say, like for example, in this point, where's my mouse? I lost my mouse. Hang on. Okay, here it is. Once you see price, that was a strong downward move, but once it comes back or close to the cloud, you're gonna has to ring a bell to tell you that, hey, be careful. It's coming back into that resistance level. We're possibly looking at less momentum towards the downside, or weakening momentum towards the downside, less strength towards the downside. And as it reacts inside that cloud, we're going to see that change towards the upside, right? That push towards the upside. Those of you who are familiar with what I do, I'm pretty sure I recognize a lot of names here, right? What is, this is something that I haven't put into the slides, but what is one other reason why this will be important, right? When you see price coming back into the cloud, why would that be? What would be a scenario that makes it also an important level? Something to think about. Right? So as it comes back into this area, we're looking at a possible change. At that point, we might also have something, a news event. Right? You can see that big downward move. We can see price coming back into the area or into the cloud. Could be because of a change in economics, right? You can see that push back in, and then that big drop, and all that price fluctuating in that area could be a news event. So I like to use this as well to prepare me for when I'm looking at analyzing news, right? I'm looking at news events. I see price, or leading up to news events, I see price come into or close to the cloud. It rings a bell to me. I go, hey, wait, it looks like we might see a possible change in direction, right? So very important there. It could also indicate that institutional traders are building up by actually, I tend to look at it as a bit more of a overall market sentiment changing. Not just institutional traders, but overall traders have sold it down. looking to take profit, looking to consolidate with the news coming out, changing that trend, pushing price back towards the upside. Okay. So as I was telling you guys, don't just look at just the Ichimoku alone. Combine it, right? Combine it, put a few things together, gives you more information to support that. Especially if you are new to using an indicator, right? New to using an indicator, because what happens is that you'll be looking at this, right? You'll be looking at this as price comes up into the area. So it's come into a resistance area. What you want to do is not just look at the cloud and go, okay, now that we've got the cloud, looks like it's going to break up, right? It looks like it's going to break above the cloud and form as a support. Not always the case, because you can see it's a big cloud, right? And when you see big clouds, normally it leads to a big thunderstorm as well, all right? So when you see that big cloud there, big strong resistance, that's one warning bell. Secondly, we're talking about a channel, right? We're talking about a channel. You can see that peak, the peak, and then now forming another level there. So when you put it down, when you put it down, that's forming that downward trend line, or that channel, the downward trend line. So now we have two factors providing a bit of a resistance level, right? We have one factor, which is that trend line towards the downside, and also price being inside that cloud, forming, price being inside that resistance level, forming that possible resistance towards the upside. What else can you do? You can also apply the Fibonacci, right? Apply the Fibonacci towards the downside there, from the top down there. You can also see that price has come up to that 38.2 Fib level, which puts it all together. That's that confluence of analysis that we're all looking for. You have price in a cloud, you have that trend line towards the downside providing a diagonal resistance level, you have your Fib level of 38.2 providing that Fibonacci resistance level. Price is in a resistance level. What do you think is going to happen next, given that price is in a resistance level? Could bounce, right? Great. Thanks for that, Zoran, again. Could bounce. And what we actually saw was it hit that level, failed to break above, right? Failed to break above, and then it bounced back down towards the downside, following on with that trend line, following on with breaking below that cloud, pushing lower. You can see that next formation of the cloud pushing lower again. Okay, and then you can also see the Fib level pushing down. And in this case, as an example as well, we've added in the stochastics, where you can see was an overbought area, and then again an overbought area. You can see that big rejection towards the downside. Okay, so putting it all together, you're going to see multiple indicators, multiple levels, just to show you a possible rejection. Okay, I'm not saying that it's always going to happen, because we all know, right? We all been trading. We all know that we could also see price push towards the upside, but more likely we're going to see it with everything being in confluence. We're going to see that reject and turn back down. Very good risk to reward there as well. As you look for the rejection, you could be looking for that as an entry. Stop loss would be above that trend line, above that Fib level, above that cloud, right? Take profit. If you just had a simple take profit back down to that starting point, even without calculating the pip levels, you can see that it's a very good risk to reward trade as well. All right, so a question here from Ari is, what's the best time frame to use the Ichimoku? Again, I would say that 4 hours, 1 hour, right? 4 and 1 hour. why I always tend towards the 4 and the 1 hour time frame is because for a lot of retail traders, if you did it on a daily time frame, it is going to be stronger, but not a lot of retail traders, especially through my experience of coaching retail traders, not a lot of retail traders tend to hold trades for a very long time. Okay, so most retail traders hold trades for a day or a couple of days, at the most a week. So looking at it on the H4 and on the H1 time frame will be sufficient, right? If you're looking to use it in a smaller time frame, an M15 or the M1 or M5 time frame, it still will work, but bear in mind that whenever it's in a smaller time frame, you're going to see that it gets a little bit noisy, right? You're going to see price push out of the cloud, come back in again, because of that price is going to be a lot more volatile. It's going to spike up and come back down again quite quickly, right? So I would rather prefer to use it in the H4 or the H1, particularly for me in the H1, because I do hold my trades more for the intraday. So when it's prices inside that cloud, right, I would tend to say either I do it in the short term towards the downside, or if you're looking at a little bit of a longer trade, push it lower, or look for it to turn show a strong turn, and if you're happy, take on that risk as well. Okay, hope I answered your question there, Ari. Typically H4 and H1. Okay, this will be something that I think, if you are writing it down, if you're writing things down, taking notes, or if you're not, take a picture of this. This is something that would be crucial to your trades, right? I always love a checklist. When I come to analyzing trades or analyzing a method of trading, a checklist is always going to be super important, right? So playing continuation, a bounce or reversal, you want to look at this and be able to answer these questions. Like the example we just had, is price respecting the Ichimoku, right? Is it inside the cloud? Is it below the cloud? Is it respecting the Ichimoku, right? Is it respecting any trend line? Okay, so coming back to the example, there, is it in the cloud? Is it respecting that trend line? Is there any horizontal support or resistance levels? Or in this case, you can use these two together, right? Any Fibonacci levels there, whether it's a retracement, extension, projection, or expansion, right? So any horizontal levels. So first, you're looking at Ichimoku as any cloud levels. Is it in, or is it below the cloud or above the cloud? Is it respecting any trend lines? Is it testing or coming close to a horizontal support or resistance levels? And then, more importantly, or as importantly, is where's the next key level it could go to, right? Because these are your analysis, right? This one tells you trend. Okay, this one tells you trend. This one tells you, what does this tell you? If it looks to react off a support or resistance levels, or reacts off a Fibonacci, what does this tell you? Let me test you guys. What would a support or resistance? Not quite, because the direction of your trade will be the trend, right? I would use this more as a bit of a stop loss level, right? To help you identify a bit of a stop loss level. Andy jumped the gun a little bit. This would be your next key level, right? The next key level would be your take profit level, right? So now basically, if I did draw this out, you can see, hey, is price respecting, is it respecting any trend lines? So we got, for example, a trend line towards the downside. If price is respecting, we got the trend. If it's reacting to any key levels, based on our example just then, we had a key level, right? So we know our stop loss is above that key level, and then our take profit will be below. Coming back to this example again, it's respecting the Ichimoku as along that trend line, horizontal level. So we know that our stop loss will be above that point. Then next key level or next target level will be our take profit level. Okay, and then those trend line and the cloud or the Ichimoku indicator will be that direction of the trade. So you look for the rejection, to look to sell down with your stop loss and your take profit. Make sense so far? All good, everyone? Okay, so if you haven't already, make sure you kind of catch, why not the 23? Let me go back to that. The 23 not there because the price is actually broken above 23.6 already. So at that point, we're looking at price reacting or potentially reacting to that 38.2. Okay, so when price is going in to the cloud, then we'll say, okay, it's going into the cloud, broke strongly into the area, and what's the next level there? And also because remember we have that, we have that trend line, so it's all that confluence coming together. All right, so if you haven't already, make sure you take note of that checklist. I love checklists. Okay, here's another example, right? Playing the continuation of bounce or reversal. What I'll do here is I will jump onto, so we actually have a little bit of a video. If you haven't, or if you can, right, take a note of that address. You can always check out that video over and over again. It's uploaded already, so you guys can watch it. Let me just see if I can jump to that video. Okay, there we go. Just checking you guys can see my video. Yes. So you can see that's how we, develop that idea. Based on that, we have a Fibonacci level towards the downside, identifying those levels. So like Zoran was asking, why not that 23.6 level? Right, we do another fib level there. You can see that we have a bit of a confluence between those points. And those of you who like fib levels, we got a lot here. There's also another session. I'm pretty sure we have a session coming out on fib levels as well. Applying the cloud in there, or the Ichimoku in there, you can see price reacting to that overall cloud. Okay, let me just do that for you guys. Don't watch it now, watch it after the session. Right, so in addition to that as well, not just that trend line, we also can form at the channel. So we also can form that channel towards the downside, because you know that if you can form that trend line towards the downside, you have that channel as well. And then you're going to see that reaction. You got your sell entry there as a test to reject that resistance level, that confluence of resistance levels. Your stop loss above that point, above that 61.8 level. And then your take profit level lower down. Okay, so when you do watch this again, you can also, this is actually being there's a bit of a commentary behind it as well, so you can listen to the analysis behind that. Okay, I've just turned off the audio on that, but you have the links there in the chat. You can always catch this session again, or this example again. So you can see that reaction to that resistance level, anticipating that push towards the downside. Take a bit of a hesitation level there. It's a possible take profit, right? Or you could also go down towards the next level at that bottom of the, or the starting point of that bounce as your next take profit level as well. Okay, so that's a view of how we develop that idea as it happens, right? Not just after, this is not just a indicator or a strategy that you do after the fact. This would be something that you can do as it happens. Okay. So just to walk you through again, you have that entry. You could have a take profit there, or at that starting point there as well. Again, those levels are there. Those questions and checklists are there as well. Okay. Here's another example. I like this one. So you don't have to use it just as a reversal or continuation. You can look for it as a breakout as well. Right? You can look for it as a breakout. In this case, horizontal levels. Right? We have the Ichimoku there. You can see a bit of a push towards upside. Right? That push up with a horizontal level there with a 61.8 from this point, projection towards upside. And then we have the next target level at 135.14. And they can see that push towards upside as it follows. As price stays above that cloud, you can see that push towards the upside. What I'll do is I'll go through a couple more of these examples and I'll show you some examples live on the charts in conjunction with the news we're going to have over the next couple of days or into later tomorrow. Right? Playing the breakout here with that trend, with that support level, trend line, diagonal trend line towards the upside, looking for breakout, looking for a breakdown towards that point. Right? Down towards that point. So looking for it to break, following that cloud. Price is still below the cloud. You can see that red cloud pushing it or giving a bit of a leading view that we could see price push towards the downside. Okay, this is a little bit blurry, but this is the same link. This is the same link or similar link there. Okay, so what I'll do here is I'll show you let's look at some charts again. Oops, what happened here? All right, let me just clear this out. And then as we go, we have the Ichimoku there. Okay, and hey, look, easy, almost easy does it. We can see price pushing lower. We can see it way below, very strongly below that cloud towards the downside. Okay, another thing you have to pay attention to, we don't have any diagonal levels at this point, but we do have, let me just move this aside. Okay, but we do have that horizontal level. Okay, so we have that horizontal level. What I would be looking for here is whether price could come down following pushing lower because of one of the reasons with the cloud pushing lower to break that 0.6672 support level. This is on a Aussie dollar on H4 time frame. Okay. And where can it head towards? We have a bit of a projection level. We have a next level at 0.66. So 0.66 there at a minus 27.2 or 0.6520 level at a minus 61.8. Okay, so in this case, what I'll be looking for is, let me see if I've got a diagonal trend line. Not particularly. Does this work? Nope. Okay. Not great. I'm not very happy with that. Okay, so you can actually see with that. So you can see a bit of that diagonal channel, the downward channel formed by the top, very close, another top there, formed by that point there. And we're looking for price to come down, break below that point towards that bottom of that channel of that 0.66 level. So in this case, the quick trade would be to sell down stop loss just above that resistance level, about 30 pip. Take profit again at about that 50 pips. You're looking at 1:1.5 towards the downside. It could go further down towards that minus or that 0.6520 level as well. At this point, I'm anticipating quite significant moves across the board. All right, so I'm anticipating quite significant moves across the board, not just on the Aussie dollar. You can see on the euro as well. Euro actually forms quite nicely, so remove that. You can see that. Look at that. Price came up, hit that cloud, rejected that area, almost nice pin bar towards the downside, and we're looking for that push. All right, as price stays out of that or gets rejected or resisted that upward or that green cloud, we're going to see that push, possible push towards the downside, and also that formation there. Right, price is moving. You can see that formation towards the downside. Okay, so with that, what we also have will be horizontal levels. I don't have any diagonal levels here. Right, no strong diagonal levels, but I'm pretty sure that if I did a fib level up there, you can see price approaching that 61.8 level. So we're looking for not just the cloud. I'm not going to sell straight away at this point and anticipate that it's going to come down towards this support level straight away. Right, I'm going to wait for price. This is an indication I'm looking to sell it down. I'm going to wait for it to break below that 61.8 level. Gives me another level of confluence to sell down towards that 0.9880 level. But I also know that there's going to be a little bit of a hesitation at that 0.99335 level as well. Okay, so we're looking for that. Very simply, it's just, you could just look at the Ichimoku clouds and then your fib levels. Trend is relatively straightforward here on the euro dollar. I think one more I was preparing for you guys was not the Aussie dollar, not the US yen actually. Yeah, that's the one. So you can see the US yen very strongly, right? How many of you actually were buying the US yen up towards the 145 level? You would have seen that. It's very strongly above that cloud, right? And cloud pushing towards the upside gave us that big momentum pushing up, only came down to test that level before. And once it tested and rejected that level, we saw that big push towards the upside. Recently, we saw that price consolidating right at that level, right? Let me just check this. Okay, that's the 26. Okay, so price consolidating right along that support level there, right? We're looking for whether it could push up. See, that threat that was looking like it was going to sit there and consolidate, now looking like it's going to push up a little bit, and that's why we see price starting to form. I wouldn't get into a trade right now because it hasn't cleared higher. Right, so I would do this. All right, so oops. Yep. Okay, you can see that it hasn't cleared higher. It needs to go above that 23.6 level, and then it's coming very close to that horizontal resistance. At this point, even without the fib level, right, I'll be waiting. I would actually be waiting to say whether can it come towards that 145 level, right? Can the US yen push towards 145? And if it does, can we see it push? Where was it ahead? Let me see. Was it that move towards the 148? I don't think I had that. Let me just check. Okay, I had that one first. So from that recent bounce towards that recent high point, to the 147.20 level. I was remembering 127.20. So I'm looking for whether price can first move up towards that 145. And if it breaks above, we're going to see that cloud form quite strongly, right? And we're going to see price supported to push up towards that 147.20 level. I think I can do one more here, and we can see that bit of a confluence at 147 as well, right? So you can see that push towards the upside. So far, so good. Any questions, anyone? One more was that one. Oh wait, I want to do this one. Gold. Okay, so gold, we've been looking at it. 1680 was a key level that I've been talking a lot about for a long time. It finally broke. Now the question was, how low can it go? We went to the weekly time frame just to find that horizontal level was that 1645, right? The horizontal level at 1645 or even 1625. So coming back to the H4 time frame, you can see that cloud, right? That cloud pushing down, came up, resisted, rejected that, or rejecting that level to push towards the downside. I'm looking to see now if this continues, if that cloud continues to push lower, and if price continues to drop, then we could actually see gold possibly come down towards that 1625 level. All in all, as much technical analysis we can do, as much as much thoughts that we can put into for a Ichimoku analysis, what you want to pay attention to as well is that on Thursday morning or through Thursday afternoon and the evenings, we have massive news to be released. The US is looking at increasing interest rates from a 2.5 to a 3.25%. We have the Bank of Japan with their policy statement. We have the Swiss National Bank looking to increase rates from a minus 0.25 to a 0.5%. And the Bank of England with another increase from 1.75 to 1.25, from 2.25%. So pay attention to the fundamentals as well. It does give you a little bit of a view, right? A heads up that while we could have possible price into the clouds or trading downwards, any change in a significant fundamental view could reverse price, right? So look for, in this case, possible, if price does push back up, test that resistance. Can it test and reject back down again? All right. So with that said, I've come to an end of the session. Do you have any further questions? And more importantly, did you find this session useful, good and useful for you guys? Thanks, Sana. You're most welcome there. Fantastic. Thanks for that, Andy. I'm pretty sure, I'm not sure what the next session is again, but I hope you guys will see you guys at the next session as well. With that, trade well, trade safe. Remember, the big news is coming up. So manage your risk, manage your leverage, and trade sizes. Take care, and I'll see you again. Bye-bye now.